What's up everyone, it's Kadi with MoneyVest. So in today's video, I wanted to break down our very own MoneyVest index. And this is an index that I created using a combination of 5 very important market metrics. I'm not going to go into too much detail as to how this is built because I obviously don't want this to be recreated because there's a very, very unique formula that I've applied to creating this index using the 5 metrics that I'm going to go over. And I have backtested this with the help of one of our members. We have, looked at the historical data, and the results have been very, very strong. And I'm gonna go over how this works and how to use this index to the best of its ability. So hope you all enjoyed this video. So this is going to be a public YouTube video, but moving forward, all the readings of the MoneyVest index are only going to be kept private and shared with all the members only. And more importantly, we're going to be putting this index on our website eventually because there is a lot of complex data points and the formulas that need to be built on the back end in order for this index to show up on the MoneyVest website. So this eventually will be for members only, an index that you can follow and track and of course guide your decision making into the markets for all the members. So if you want to get access to this on a regular basis, I will be sharing the readings of this in our Discord. Link's going to be down below. We'll love to have you on board. And of course, if you have any questions, I would love to kind of extend this discussion and this engagement even further, so that if you have any questions, feel free to reach out. I'm more than happy to discuss as much as I can without, of course, giving away the source code or, of course, the combination of the calculations of this index. So think of it as our very own fear and greed index. And the reason why this works so well is because it has some of the most important technical indicators that we look for when it comes to buying or selling. Now, this right here is going to be what it looks like. So let me just break it down. So this is what it is. So in this, we've got obviously the S&P 500. And at the bottom, I've got the MoneyVest index. This is what it looks like. You know, it looks very similar to an RSI reading, so relative strength index, but it is nothing near close to the RSI. It essentially is a combination of, like I said, 5 different metrics that are provided to us from the market. You know, these could be from anywhere from market breadth to volatility to percentage drawdowns to, of course, and looking at the RSI readings as well. So it's a combination of a lot of different things using a very precise calculation that I did in Excel just to get an idea of, okay, what would be the results looking like if I backtest this entire thing. And this right here were the results. If you come over to Strategy Tester, you'll notice the percentage of profitable, meaning that, you know, the percentage of winning trades, the number of winning trades divided by the total number of closed trades was very, very good, right? 100%. So of course, it was a very strong indicator that, okay, average number of bars and trades, 50, this is the average trade, 34% on average. The max drawdown was about 0.38% and percentage profitable about 100%. Now, the thing is that on theory, on paper, a lot of strategies can yield a very, very successful rate of return, right? Very nice winning success rate and very nice average 35% trade. I mean, this is fantastic, right? On paper, on theory, it can look amazing. But in reality, things work differently because in reality, what this doesn't take into account is the idea that there is going to be some level of emotions involved as well. So this right here is, again, the profitability line, and you can see 30 total closed trades, 100% winning success here. So in this strategy, of course, what's not being accounted for is how emotions play a much more significant role in our trading and our investing. So the way that I use this MoneyVest index is essentially for buying only. For buying only. I don't necessarily use this for selling. And the reason for that is because you'll notice that every time, and it's kind of interesting, right? The more you learn about the market, the more you will kind of understand that every time this index is in green. So just to give you a little bit of that logistical idea, that this number kind of ranges between 0 and 5. Okay, the MoneyVest index fluctuates between 0 and 5. In the most rarest of situations, it will drop below 1. In the most extreme rare situations, it will be higher than 4.5. So in most instances, you will see this number between 1 and 4. Okay? 1 and 4.5 basically. In most situations, I would say I haven't done that analysis. Maybe I should, but I'm going to assume that 99% of the times, I mean, this index is going to fluctuate between 1 and 4.5. In the 0.11% of situations, this is going to be either below 1 or over 4.5. And that would in itself be a very, very extreme situation for the market in general. So really what we're looking for with this MoneyVest index, and what the idea was for me personally, is to figure out the rare events in the market. The rare events that happen very, very few times, because that is where most of the money is made. Because if you're able to make very good decisions during those rare events, that's what's going to make all the difference in the market, in your long-term success, in your long-term investing, right? So this number, like I said, fluctuates between 0 and 5. 99% of the time stays between 1 and 4.5. And the 1.75 got a dotted threshold here, which is, again, something that this index has come down to. And this is 4.25 on the upper end. And what you'll notice is that every time, you can already start to tell, like every time it comes down to 1.75, it actually spends fewer days. It spends less days at those levels than it does on the upper end of this cycle, right? Upper end of this range of 4.25. So again, if you kind of come over to where we have been, if I come over to the daily chart, you can see that a little bit more clearly. You can see that it came down to 2.27 here back in October of 23. And it only really stayed there for a few days to a few weeks, and then it bounced back up. And you can see how many days spent in and around 3.75 to as much as 4. So the reason why I use this index, I personally use this as more of a buy signal as opposed to a sell signal, is because this can show me, a sell signal. This can show me the markets are clearly overbought. The risk rewards are not that great, and still stay that way. And still stay that way for a very long time, right? Because we can stay at these levels for much longer than on the opposite direction. It stays much shorter. The duration of the number of days, or the duration of this index staying below 2 or 1.5 is less than the number of days or the duration that it stays above 4 or 4.25. So I hope you kind of get the idea. And the reason for that is because over long periods of times, the markets continue to trend higher. They continue to push higher. Right, over long terms, they are consistently making new all-time highs, and of course, they're moving higher and higher. Now, if you take a look at on the weekly time frame, so going back to the analysis, and the limitation with this index is that it only goes back to as far as 2007. There's a few other indicators that are not available prior to 2007, so we weren't able to backtest this going back, 1950s or 1970s. But we did remove certain metrics. So out of the 5 or 6 that we're using, the ones that weren't available prior to 2007, I removed them, and then I backtested even further back to, I believe, 1970s and 80s, and the results were, again, very, very good. Not anywhere near close to 95 or 100%, but still very good in the 80% range. So kind of the idea is that this MoneyVest index does give us a very good framework to operate in. So if I bring out the again the levels that I think I really need you to pay attention to, and use this, in my opinion, for me personally, as a buy signal, you can see that every time this index was, of course, in the below dotted line, which is at 1.75 to 1.3, you'll notice that was clearly a very strong buying opportunity, right? So that was the time when, of course, we did see the S&P 500 selling off pretty aggressively back in 07 and 08. This right here is also a level from July of 2010, where, of course, this index was in the 2s. Again, good buying opportunity because the markets did sell off during that time. Then, of course, we had August of 2011, where this index was, again, down to that below dotted line or dash line in the 1.75, 1.7. And, of course, the markets were also selling off. Same thing happened in June of 2012. Now, the degree of these sell-offs is going to vary. And that MoneyVest index tracks that also, because sometimes you'll notice that we don't really come down below 2. Sometimes we're in the 1.75 to 1.5 range, but in other instances, we only come down to 2.5 or 2.6. Not saying that that's not a buying opportunity, but the risk reward is not as great as if the index was down in the 1.75 or 1.5, right? So that is kind of showing us a different degree of risk reward setups, the different degrees of sell-offs. So again, if you come over to the COVID crash during the 2020 pandemic, the markets dropped quite aggressively, down over 35 to 40%, and this index was down in 1.2, and then it quickly reversed back higher, which was clearly a buying opportunity for us. This is 2022 into bear market. Couple times this index drops down to 1.9, so sub 2, and then of course recovers back higher. And the last really good opportunity that we had, dollar cost average and buy, was back in October of 2023 when this index was once again down in the 2.3 2.4 level. Again, clearly not sub 2, but still a decent buying opportunity, because we did see about an 11% correction in the S&P from recent highs, and since then of course we have rallied over 28-29%. So the idea is that I use this index as a buy signal as opposed to a sell signal, and it really tells me when the risk reward is very, very good for me to deploy my capital into the market and start being more aggressive with buying and of course deploying cash into the market again. So this is what's going to be available, and right now you can see the reading is at 3.59. So if you come over to the daily chart, you'll notice that we are right now at 3.48 on the daily time frame, which is quite neutral. We did come down a little bit, which is exactly why I shared this in our Discord, suggesting that okay, we can start nibbling into the market now, but now we're starting to move back higher. So this is a very, very neutral range, and I'm really looking for at least 2.5 or lower on this index. So that would be the level 2.4, call it, or below, for me to be very, very aggressive in this market from a dollar cost averaging standpoint. That doesn't necessarily mean that I can start selling or I'm not doing anything. No, I can still sell options. I can still hold on to what I have and continue to kind of take advantage of this rally and those gains. But really, when it comes down to buying more aggressively and being very, very aggressive in dollar cost averaging and buying, that's going to be 2.4 or lower. And this index kind of helps us do that. It helps us kind of guide through our decision making in that process. So hope you all enjoyed this video. I'm going to keep it nice and short, and I will be sharing the readings of this with all of our members in our Discord, and this is also going to be a part of our MoneyVest website. So link's going to be down below if you want to join. There is a 16% annual discount that's available until the end of this month, so 2 more days left if you want to take advantage of that. And as always, happy investing. I'll see you all in the next video.